Hey everyone, it's Hima here. I've got a skinny dip for you featuring the ES and NQ breakouts. Today's Wednesday, September 11, 2019. Before we take a look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So I'm taking a little different look at the futures this time versus previous skinny dips because we are approaching the roll date for these contracts. Now, the rollover date that the CME group determines is a fixed date. How you roll and move to the next contract for your trading is up to you. A lot of people follow different methods. I have a method for my full skinny members, and they will hear that in their reports each day. But in order to still analyze effectively and be able to manage the move from the September contract to the December contract, it's best to look at a continuation chart. So in TradeStation, the way you do that is you type in the @ symbol and then the contract that you want to look at. This only applies to futures naturally. So this is the ES continuation chart, still a daily chart, and I still have got my RSI power zones at the bottom. Now we finally, after weeks and weeks and weeks of sideways trading, finally had a breakout in early September from the consolidation range. And the price action yesterday, Tuesday, September 10th, before it occurred, my momentum indicators and price patterns were hinting that we might get a tradable low. And we in fact did, this low that formed during the September 10th session. So here's the 60-minute chart of the same price action. And you can see that at the time I normally do my analysis into the 9 a.m. Eastern hour, price was still correcting lower. Correcting means going against the prevailing trend, which was established as up after we broke out from the daily range. But how were you supposed to know whether this weakness was going to persist and keep taking prices lower, or stop at some point and resume higher? That's a combination of price patterns, support and resistance, and my RSI power zones indicator that help me tell my members ahead of time, hey guys, I do think we'll have more short-term weakness this morning, but I think we're going to be forming a tradable low, meaning a low that should give us opportunities to go long, although may not be a low that leads to a huge giant move. And that tradable low came in. Now, one aspect of the RSI power zones that provided a clue was that it was holding the bear support power zone. So the zones and the movement of the RSI between the zones is the first layer of analysis to consider. But there are also signals that can be applied on this time frame, on lower time frames, on higher time frames, and those I detail in my 4 zones RSI coverage system. But coming back to what we have ahead for the ES, again, coming into this transition time of a roll period, here's where I want to come back to the daily chart. Now, coming back to the daily chart, you can see that I've added in a blue horizontal line. This is projected resistance, an upside projected target based just on price and momentum. No Gann, no Fibonacci, nothing else, just price and momentum. Now, this measure has several points of time along the way that price will likely ebb and flow through on its path to this target. So the first timing point that's coming up really fast is September 16th. After that is September 30th. And after September 30th, the next timing point is October 21st. So I will refine daily in the skinny and the mini as I see the price action unfolding, but you can still use these key timing points to navigate any long trades you might be making with the expectation of S&P 500 related futures, whether it's the E-mini or the micro, or let's say the SPY, okay? Anything in that S&P 500 family, you can still relate these timing points to, right? And give you an idea of when this market might top out, bottom out, or accelerate an existing trend. So this is the look at the ES. Now let's move on to the NQ. Now for the NQ chart, that's the NASDAQ futures, again, continuous contract, I'm going in the opposite direction, starting with a smaller time frame and then working my way up. So here's a 15-minute chart, just to give you an idea of what the price action has been the past few days. Now, the price action on the 15-minute chart, also into Tuesday's session, showed a relationship between price and momentum that hinted that the downside move would be over and a tradable low would form. And that in fact occurred. And then there were 3 instances after that low occurred where the RSI power zones would have clued you in to an opportunity to go long. Okay. Now let's look at the 120-minute time frame. On the 120-minute chart, I pointed out support at 7769 as being important. Notice that while price did come and test that support, it wasn't able to maintain a close below it. And by maintain, I mean posting 2 successive candlestick closes outside of a level. So if it's support, then if we're not able to have 2 closes in a row below it, then this is just support being tested but not completely violated. Futures stabilized and we're able to resume higher. Now let's move to the daily chart to see what the key timing points look like for the NQ. So here's the daily chart of the NQ with 3 timing points, just like how I drew out on the ES chart. But these 3 timing points are a bit ahead of the ones that I gave you for the ES. The first is Friday, September 13th. Yes, Friday the 13th. Now, this is setting the stage for a high to form on that day. Not necessarily the mother of all highs or anything like that, but a tradable high where if you were long, you might want to protect stops in your positions. And if you're day trading, you may want to stay alert for a possible trend change back to down, or at least a few days of correction. The implications of the September 26th and October 16th dates, again, these are a little bit ahead of the dates that I gave you for the ES, are to be seen because it depends on what price action is doing going into those dates. So here are dates for you to mark on your calendar for the ES and the NQ. And again, I did these calculations on the continuous contract chart on purpose so that these would last beyond just the current September front months and potentially carry you into the trading for the December contract. Catch you next time. You can sign up at himaready.com/tribe gift to get access to more hot, timely, and actionable market analysis.